Hello everybody. So HIMS had quite a rally yesterday, but I believe this stock is still very cheap, and I wanted to take a few minutes to discuss the numbers for HIMS and why I think it's so cheap. So, as a reminder, HIMS has a gross margin of 78%, which is a SaaS level gross margin. And the forward growth expected by analysts this year over the next 12 months is 53%, which is again higher than most of the SaaS stocks that I cover on the channel. So to me, this stock is almost better than SaaS, or should be at least trading in line with SaaS. Also of note is the fact that the revenue of HIMS is mostly recurring. 90% plus of the revenue is recurring. And for revenue that is not recurring, it's typically their channels that they have at Walgreens or Walmart, where they will sell tiny products that serve more as advertising for the brand rather than bring in revenue. Most of the revenue is online, prescriptions, and recurring. And it's also worth noting that HIMS has no debt. Still no long-term debt whatsoever, and $180 million of cash on the balance sheet. They will be adjusted EBITDA profitable in Q1 of 2023. And for a company like HIMS that has no debt, the adjusted EBITDA is essentially cash flow. So that cash pile is going to stop diminishing and is going to keep growing going forward, as they have committed to being adjusted EBITDA profitable for the foreseeable future, which is great. It's really what we want. We don't want a stock to show earnings too early and start paying taxes, but adjusted EBITDA, flat adjusted EBITDA removes that risk of bankruptcy, and it gives me a lot of confidence in HIMS. I love HIMS too because of the long-term guidance that they gave us last quarter. Assuming no change in valuation, I've made a few videos about that long-term guidance. That would be almost a 3x in 3 years, based on that end of 2025 revenue goal of $1.2 billion. And it's noteworthy that the analysts are already guiding much higher at 53% revenue growth this year. They're already guiding much higher than what this sandbagged guidance that they gave us 3 months ago implies. They're already guiding much higher. So that's very interesting to me. This stock is very interesting to me. I believe this stock is way too cheap right now, and I'm still accumulating, even though it's beyond $10 a share again, right? It went back to above $10 a share. The market will wake up to HIMS someday. And I think more importantly for HIMS, one of the things that we need to talk about is marketing. So this company has a lot of SG&A expense. Much of that expense, the bulk of that expense, is marketing. And that marketing is good. You want that marketing expense because that's what's going to lead you to negative net income, which is going to avoid you paying taxes, right? You're not as a company, they're not going to be paying taxes if they have negative income. We like to see this. I like to see this a lot. The marketing spend for a company like HIMS, who has 90+% recurring revenue, is a good thing. HIMS has shifted much of its advertising, by the way, away from platforms like Facebook. I mean, they still advertise on Facebook and Google, but they're going more towards mass market advertising. They now have ads during football games, for example, or they have ads on CNBC radio. They target mass market men, quote unquote, and they have also a female demographic. For a female demographic, they tend to focus on key TV shows and celebrity endorsements like Kristen Bell. This type of mass market advertising, I think, is very wise for HIMS because the products that are sold by HIMS are, unlike many products out there, these products are for just about everybody could need their products. The total addressable market, the number of potential clients out there in the US is tremendous. And this is one of the very few companies for whom mass market advertising works and works better. And that's what the CEO has said multiple times on the call. They actually find that it's cheaper for them to do mass market and reach millions of people with an ad on TV, even if TV is a declining medium. They also have advertising in big cities, Subway. So this is all of the advertising that they do. Again, marketing is a great spend for HIMS. Not only does it keep the stock cheap for us to buy, not only does it avoid showing earnings, they don't have earnings, they show no profits, they can grow the business, but when you look at the number, they have an 85+% long-term retention rate of more than 2 years. So customers that subscribe in year one that are still customers at the end of year 2, about to begin year 3, 85% of them stay from year 1 to year 3. It's amazing. It's absolutely amazing. And they also have strong unit economics with a payback of under a year, and that is the goal that they have. And I calculated the payback in a prior video. It was a little more than 6 months on payback for a customer, which is stunning. So this company has an incentive to clearly continue spending on marketing. And when you spend money on marketing for recurring sales, for a customer that's going to be having your subscription for maybe half a decade or more for recurring sales, when you do that, that's a very big deal, because that marketing expense is actually an investment in the long term, in the future business. It's not like advertising for, say, a car. If you advertise for a car, you're going to sell that car once. They're going to keep that car maybe for 5-7 years, and then you have to advertise again. No, here when you advertise for a stock like this advertising is actually an investment, because you have a direct recurring revenue and you have a payback on your customer acquisition costs. So I think this is very important for HIMSS. Another thing that I love about HIMSS is when you look at everything going on after gross profit, which gross profit is excellent, you look at their R&D, you can see that their R&D expense is very small. By any standard, it is very small. And this is related to the nature of their innovation. Unlike a bunch of SaaS, right? The topic of this video, why I believe HIMSS is better than much SaaS. Unlike a bunch of SaaS, the innovation in healthcare is not costly at all. It cost them only $29 million last year. And why? Why is that? Because there's been so few innovation in the field of prescription drugs and prescription generics. There has been so few innovation that I believe a company like HIMSS has dozens of low-hanging fruits coming ahead for them, because this industry is so legacy. These pharmaceuticals are such bureaucratic entities that they cannot innovate nearly as fast as HIMSS can, and that's why they've been able to release a lot of customer-centric products, generic drugs, and this is an example. So this is obviously, you have the traditional ED drug right here. Scary, not very customer-centric, and then you have the fun, humorous, sometimes provocative marketing of HIMSS, and they call them hard mints, and it's an innovation of them, right? It's part of their compounding drugs offering, where they reformulate and redo drugs and do kind of custom drugs, and I think it's very important, and they can make products that are much less intimidating than the old prescription way of doing it. These are still prescriptions, by the way, but they can use R&D to make prescriptions compelling and to build a brand that is more compelling, and that's going to increase patient adherence to the drug. And I think this is a very powerful stuff. And they can also do that because they are not a bureaucracy, right? They are a very agile company, and we owe this to them because of the fact that they operate fully outside of the health insurance world. You don't have to deal with so much of the copay rules that insurance offer, and so much of the different payment rails and payment processes and other matters that most prescribers, most pharmacies, most doctors use, and because of that, it's cheaper than copay. And you probably know that if you go to a regular pharmacy, or if you go to a doctor and if you look for a prescription, typically they spend as much time, asking you about your insurance as they spend asking you about, say, your health issues, which is why I think it's particularly powerful for a company like HIMSS, where if you remove insurance out of the equation, you can really move much faster. And part of that competitive advantage, which I view, being outside of the health insurance system, I view as a competitive advantage, is because really it's a different industry. Really, the health insurance business is all about sick care, and we have great sick care in the USA, right? I mean, treating cancer, all surgery, heart surgery, you name it. We have great infrastructure on that. But as far as preventative healthcare, or what one would call true healthcare, what I would call true healthcare, I think we can do better. And I think this is a company that helps us do much better. And is the future of healthcare, or in a way, is the best type of healthcare 100% preventative healthcare? Healthcare that you get early enough so that you don't really need, or you minimize the need for sick care down the road. And that is what I think HIMSS is targeting. And when you look at a lot of the matters that are not covered by insurance, it's major. For example, most weight loss related matters are not covered by insurance. Things like nutrition, things like programs to help you lose weight. This is not covered by insurance, even though weight loss is the leading cause of so many of the different issues that one can have, from type 2 diabetes to heart issues to heart attacks, so many different issues that atherosclerosis, many come to mind, but so many different issues that you can have are related to weight loss matter, and to actually people being sometimes overweight. That's not covered by insurance. But see, this is something that HIMSS is going after. HIMSS and hers are going after. You can see that's their prospective market. Part of a prospective market is going to be weight, right? Trying to deal with weight loss, and they're being very prudent about this. We're being very prudent and not going too fast, like a lot of competition with selling diabetes drug without any kind of checks. No, HIMSS is being prudent, but that's going to be part of a market, and it's typically not covered by insurance, right? Same for what got them started. Any type of sex-related matters, like ED or PE, that's not covered. That is not covered by typical insurance, even though we know that these type of issues may be related to mental health and health issues, and also obesity. Everything has a lot of link together. Same for cosmetics, right? Losing your hair may or may not have an effect on mental health. There's a lot of issues like this. Infertility, same, right? Infertility treatment may be very important, may have an effect on overall health and morale and anxiety and depression. Right, pre-existing condition, that's a separate issue, but sometimes insurance will not cover you because you have pre-existing condition. I believe they have a lot of potential coming with things like longevity treatments, dealing with longevity and different types of drugs that one can use for longevity and healthy living. So I think this company has so much going for it when it comes to the future of healthcare, and they can really treat patients' issues before they get bad, before it gets too bad. And that's a major part of my investment thesis in HIMSS. Major part of my thesis is that people are going to take their health very seriously into their own hands, even if it means paying out of insurance. And people are going to take things like weight loss, like sexual health, like mental health. They're going to take these things very seriously, and they're going to be okay paying for it outside of the health insurance system. And my case in point here is that we've already accepted to fully operate outside of health insurance for dental and vision, right? Dental and vision, we typically pay a separate insurance if you have that, or we pay out of pocket for dental and vision. But it's become commonly accepted that, yes, obviously, if you need glasses and you can't see, you better get glasses and pay for your glasses, oftentimes outside of insurance altogether, because you may not have vision insurance. And so it's kind of amazing that dental and vision insurance is not part of traditional health insurance. If you ask me, I think it's kind of amazing. But we've gotten accustomed to that. We accept that. And so all of the things that HIMSS is going after, dermatology, right, skin, that's another issue that I didn't talk about. All the things that HIMSS is going after, HIMSS and hers, are these things also going to be things that we commonly accept as not covered by insurance in the future, and that people are okay spending a lot of time and money on, right? And so are we going to be okay paying for these matters? My bet is yes, we're going to be okay to do that. And you see it, for example, with the popularity right now online of the longevity supplements. And I don't know if you've read this book. This is I believe one of the most non-business life-changing books that I've read over the past 3 years. To me, as far as the non-business good books, Lifespan, right, which talks about aging as a disease and how you can really deal with anything that has to do with aging with simple supplements. I believe this kind of direction for healthcare for longevity, for prevention of illnesses and diseases is going to spread, right? People are going to become aware. And actually, if you follow things like NMN, resveratrol, you know that these products are very, very, very frequently sold out, and many people declare crazy good things going on with these products. I really highly recommend this book. If you're interested in the future of healthcare, I highly recommend this book. So the demand for me for true healthcare, true healthcare, not sick care, not dealing with the hospital when it's too late, but dealing early with all of the issues related to one's holistic health. I believe that is the future. And HIMSS, because of that, they are a new form of healthcare company as they define themselves. And you'll see when you read many documents from that company, when you listen to the call, the CEO as a grand vision, which is much more inclusive and all-encompassing of healthcare than the narrower vision of health insurance. And that is all I have to say about this. To me, this stock is better than SaaS. I prefer it over many of my SaaS stocks, especially in the wake of software that can write itself and coding chat GPTs, etc. That's a little bit of a threat to some SaaS. And I believe this stock, because it resonates so much with the consumer, I believe it's almost got a mode of its own. And so I'm very happy buying the stock. The stock is extremely cheap. It is dirt cheap. It has better stats than most SaaS, but the valuation is way lower. And it is the second cheapest stock in my most undervalued framework. And it's been for about 6 months, despite the rise in the recent stock price, despite the 30% run up recently. So this was not investment advice. This was not health advice. This is just entertainment. I hope you were entertained. Thank you for watching. Please like and please subscribe, and have a wonderful day. Thank you.